Check out this stat. So since 1995, when the SPY crossed the upper band, 75% of the time it was flat to higher 2 weeks later. Details on how to trade this statistic with weekly options for SPY or SPX are coming right up. All right, so before we get into today's strategy, breaking down that statistic I just went through with you, you need to know that everything on this channel is for informational purposes only, including this video, and that I am not a financial advisor of any kind. And if you're interested in supporting the YouTube channel and would like to get market updates throughout the week, go to the homepage of the channel and become a patron and join me over on Patreon. That is how people support this channel and videos like this. All right, so let's get into the market. Several weeks ago, I put out a video using the MOBO Bands. This is a modified Bollinger Band, so I wanted to make sure it's clear when we talk about 75% of the time when the weekly chart crosses above the band, we know what bands we're talking about. So let's talk about that part of the statement. The MOBO Band is a modified Bollinger Band. You can see right up here, it's a 10-period look back, and the standard deviation is set to minus 0.8 and 0.8. So it's very much a little bit more narrower. And in the previous video, we talked a little bit about how, when it closes below, that kind of shifts. There's a momentum shift happening to the downside, which you can see this happened in October of last year, and we had a nice run down. Well, now it's crossed back above. So I ran some numbers on this to see if this maybe identifies an edge, and I thought that it did, which is why I'm sharing that with you today. So let's break down that stat one more time. I'm going to bring that up. Since 1995, it went all the way back when the SPY or SPX crossed above the upper band. So let's talk about that. Crossed means one candle was below and then the next candle was above. So this is a cross. Now you have another close above the band, but that statistic that's not part of what this is. This is a cross. This is not a close above the band. So I want to be very clear that we crossed the band 2 weeks ago, I should say, or 7 days, whatever, 8 days ago. So this is an upper band cross on the weekly chart, and I'm looking at SPX. Okay, the next part of the stat says 75% of the time it was flat to higher 2 weeks later. So let's talk about what flat to higher meant. Flat to higher is within 1%. That's how I'm defining that for the statistics. So the way I sort of look at that is I say, okay, the weekly close this was the week of January 28th. The weekly close, if we look up here, is 2706. So I'm going to bring up the calculator, and if we do 2706 times 0.99, that is 1% lower. So that is what I mean, or what I'm defining for this video as flat to higher. Because remember, we're looking to trade slightly out of the money credit spreads. So it doesn't have to move higher necessarily for us to make money. We just need time to pass and for it to not move lower or below 1%. So if we do that, we end up with 2678. So when I saw this signal, I actually didn't pull the stats until the next week, but even so, we had such a high run up that I kind of wanted to wait for a pullback. And I'm gonna drop this down to the daily chart, and we got the pullback late last week, and we kind of bounced off that. So as we were pulling back on Friday, I sent out a message to Patreon subscribers that I'm looking to take this trade. So what we did was we sold the 2670 put credit spread that expires in 1 week. So remember the statistic. Let's go back to the stat. The stat says that 75% it was flat to higher 2 weeks later. But remember, we didn't take the trade of that weekly close. We were sort of behind a week. So 7 days later, which would be Friday this week, is when we traded that. And again, the number we came up with was 2678. So we sold, because we were getting a pullback, which was helpful, we were able to sell the 2670, which is slightly below the statistic. So that's something I want to kind of, explain. I know there's a lot of stats that you see and go around, and you know, historical stats are great. However, you really got to figure out how to apply them for a trade. Now, I could have very easily just took the trade on the close of that Friday, which would have put me at 26.78. And you know, it actually would have done well. I probably would have taken profits sooner. But regardless, I'm trying to stick to the statistics, and I'm using weekly options for this one. So this is a weekly chart. We're going to sell options 2 weeks out on the weekly close, but we waited a week and sold them on the pullback. So at this point, you know, we're just waiting for time to pass, and we're going to have to manage it like any other trade. Because it's SPX, if it goes against us, you know, there's no early assignment, so we can let our options sit in the money if we have to. But you know, we're in the context of an uptrend right now, and if the market rallies up, then you know, it could expire worthless, or you know, it could actually, you know, we'll see what happens. We got a lot of things going on with the you know, the fear of no Chinese trade deal coming up, so that could be a factor. But again, what I'm trying to do here is just trade the math. I'm not trying to predict. I mean, for those that have been following me, you know that this run up off the bottom has been crazy, and I've been in some short trades. I've been rolling my call spreads up, and so trying to predict the market is difficult. So if you can employ some statistics and math, you're going to get the probabilities in your favor, as well as the math that's involved with options. You know, it's a lot to go into this video, but I just wanted to share this stat with you guys and share kind of how I'm trading this market. Right now, we're short-term bullish, and we'll see what happens with the Chinese trade deal and where that ends up next week. So right now, I'm sitting at a 26.70 bull put spread, which, you know, kind of lines up with this sort of breakout level. So, you know, we could pull back to here, but I would expect this to be a little bit of a support level as well. And then we'll see what the math teaches us. Now, just a week or two ago, I posted an entire training and study, pretty short, it's maybe 20 minutes, and we did the same. I did the same type calculations with just the on the daily chart. So the stat we shared today was the weekly chart, but I did another study with the daily chart for trading options or trading spreads that are more like 2 to 3 days out, so a shorter time frame. And you can see, and I'll just walk through you. I mean, it's most recent data, but basically when you have a close below the band and a close above the band, and you sell an at the money spread 3 days later, it was out of the money. So this is some opportunity to get some more frequent trades. Every now and then, one's going to blow up in your face. So here is another pullback below the band and then a cross above, selling a put spread, move higher. Here we close. This one actually would have been a loser, but now we've pulled back. So if we cross back above the upper band next week, then I'd be looking to sell a shorter term put spread, which might be the same expiration that's closer to the money. So, you know, we're using statistics on different time frames. Today's video was on the weekly chart, and if you want that training on the daily chart using the same techniques, and remember, we're just talking about a cross of the upper band, definitely go over and become a patron. And if you have any questions about that, once you're in, you can send me a private message and we can talk there, okay? You guys have a great week, and we'll see you at the next video.